morning, ladies and gentlemen. Welcome to this webinar that we're hosting, the IDB Country Office Jamaica in collaboration with the University of the West Indies. This morning, we're focusing on COVID-19 and the impact on businesses in Jamaica. And to do the official welcome and the opening remarks, we invite Therese Turner-Jones, IDB Country Representative for Jamaica and CCB General Manager, to address us. Therese?
Thank you very much, Alison, and thank you everyone for being here. First of all, our special guest, Professor David Tennant, the author and researcher in question. And I want to welcome Wazir Schwartz from IFD and from HQ and all the other IDB colleagues that are joining us, and also from the Jamaica Country Office. And of course, persons who joined this webinar for this important session today. You're wondering why we're having this, and I'm really very delighted to say that early on in this pandemic, we got a lot of requests to think about the impact that COVID was having on small businesses. And as we've been working with this sector for a while, either through DBJ or through our credit enhancement facility with banks, we figured this would be a good opportunity to take a deep dive into how COVID was affecting small, medium enterprises. As you can imagine, this pandemic in Jamaica has really hit the tourism sector directly, extremely hard. And we know that there are a lot of small businesses associated with that sector in particular, whether it's taxi drivers, bus operators, tour operators, people who are selling arts and crafts, small shops, restaurants, and so on. So it's really important to have a look at how COVID is affecting this sector. This study, and of course, Professor Tennant will go into lots of details, but I think it's going to give us some insight into, number one, the magnitude of the impact, the breadth of the impact, and it will suggest for us what some policy recommendations and things that the Jamaican government and agencies like ours, the IDB, can do to continue to help the sector. So I'm really pleased that you're all here, and without further ado, I'm going to end and welcome Wazir to give us a couple of words. To Alison, thank you.
Okay, thank you, Therese. And now we invite Sector Manager for IDB, Dr. Moses Schwartz, to deliver some remarks. Moses?
Thank you, Alison. Thank you, Therese. Good morning to all of you. Good to be here today. Well, the pandemic, as you know, has hit hard economic activity all over the world, and Jamaica has particularly been affected because of the impact on tourism and other sectors. The IDB has been a staunch supporter in strengthening the financial sector in Jamaica over the years, and particularly on improving access to credit. We recognize, however, that access to credit to this segment of the business community has been challenging. The country has made rapid strides in improving the access to credit indicators. In the annual Doing Business report, moving from a high 109th position in 2014 to a 12th place by this year. Specifically, Jamaica has improved its credit reporting system with the 3 credit bureaus. It has also implemented a modern, secure transaction regime together with an electronic registry with the IDB support. This enabled the use of a wider number of movable assets as collateral and ensured the legitimacy of the assets being pledged. 4 years ago, the government launched a financial sector strengthening program with the IDB support, specifically to strengthen financial stability, enhance the financial inclusion of firms and individuals, and improve the financial legal framework. While progress was made under this initiative, reforms remain to be concluded. Jamaica has also launched a national financial inclusion strategy in 2017, having recognized the importance of financial sector development and inclusion for achieving the country's development objectives. An important achievement from the inclusion strategy has been the collaborative role of the Jamaica Bankers Association to accelerate the development of products and services to bring more unbanked Jamaicans into the formal financial services sector. Jamaica has made strides to improve access to credit for SMEs, several programs and instruments, among them technical assistance via a voucher program, angel financing, venture capital financing, and expanding credit guarantee program by the DBJ. IDB approved a credit enhancement project in 2017 to supplement the credit guarantee program of the DBJ. To date, some 280 guarantees have supported loans. 51% of those guarantees approve supported loans to women-owned MSMEs. The sectors benefiting from guarantees range from agriculture, agro-processing, distribution, manufacturing, tourism, services, and transport. Further, to make the process as seamless and efficient as possible, the IDB also supported the creation of a digital platform for the CEF, making the approvals electronic and faster, thereby serving the SMEs even better. Despite tremendous strides in recent years towards economic stabilization, debt reduction, and structural reform, financial sector development and access to credit by the productive sector in Jamaica lags behind. Also, even though credit to the private sector has been gradually increasing over the years, it was just under 42% in 2019, with commercial banks dominating this space. The current economic crisis has also taken its toll on Jamaica's financial sector. The loss of output, employment, and increasing financial difficulties facing companies and households is likely to reduce both the lending capacity and willingness of financial institutions to expand their balance sheets for some time. We are, however, hopeful that once the crisis dissipates, the sector can begin to develop again positively. But there are still things to do. While there was an impressive expansion in the percentage of the population that is covered by credit bureaus, it is recognized that more must be done to reduce the information asymmetry between lenders and borrowers. While the SIPA framework is in existence, the secure transactions regime must be enhanced so that firms can use innovative products such as reverse factoring and asset-based lending to support micro, small, and medium-sized enterprises. A pilot is currently being undertaken, supported by the IDB, to use intellectual property as collateral. Secondary market and valuation of assets needs to be developed. Financial literacy remains a challenge across the population. The authorities also consider simplifying documentation requirements and modifying the existing prudential frameworks for banks to incentivize lending to small business. The requirement to provide audited financial statements for small business is costly and time-consuming. Enabling banks to treat business loans below a certain amount as a consumer loan for the purposes of information and provisioning requirements can also ease documentation requirements that banks ask from their clients for loans below the determined amount and the required risk assessment. The regulatory environment for microfinance should provide a level playing field amongst financial institutions providing microfinance to promote competition and reduce the risk of regulatory arbitrage. MSMEs tend to rely on loans from commercial banks, even though commercial banks tend to be more risk-averse toward these enterprises. The results also indicate that most MSMEs do not utilize non-credit sources of financing, such as equity financing. The proposed microcredit market ought to help with this by offering an additional source of finance for the smaller end of the spectrum. Due to these constraints, investments tend to be limited or delayed, resulting in lost productive capacity, eroding competitiveness, sales, and ultimately growth. Banks have been lending mostly to profitable sectors, such as loans to larger firms, avoiding riskier and more difficult segments to serve, like medium-small enterprises. The pandemic has only served to exacerbate the situation. not only in Jamaica, but across the world. Loss of market caused by curfews, closure of the borders to international travel, and the tanking of the tourism sector in Jamaica has put an inordinate amount of pressure to these enterprises, threatening their very existence. The IDB has developed several instruments to help countries deal with the pandemic, amongst them support to these enterprises. Thank you very much.
Thank you, Moses. We all know that the IDB has been of significant support to businesses over the years. And with COVID impacting the way that it has, we are standing ready to be able to be of even greater support to the business community. And so at this time, I'd really like to say how happy we are to have been collaborating with the University of the West Indies. And we're extremely pleased today to have Professor David Tennant, who is the Professor of Development Finance and Dean of the Faculty of Social Sciences at the University of the West Indies, who will share the findings of the research. But before he does that, let me say that we will be taking your questions. We ask you to take very careful note of them, post them in the chat, and then when he's finished, we will be discussing them. So we invite Professor Tennant to share with us the findings of the research. Thank you.
Thank you. Good morning, Chair. Good morning, colleagues. Thank you for joining us. I'm grateful for this opportunity to present to you the results of this important study commissioned by the IDB. The study examined the impact of the COVID-19 pandemic on Jamaican businesses with a focus on MSMEs. I'm trying to get my slides to move, but they're not moving. Okay. Now, the final report is comprised of 4 broad analytical sections. There's a contextual analysis, an assessment of the impact of the pandemic on the Jamaican businesses during the containment phase, a scenario analysis examining likely outcomes if there's a second wave of the pandemic, and an assessment of the business support measures implemented by the government of Jamaica. It also has a concluding section which provides recommendations. Now, in the interest of time, the presentation today will focus on the areas highlighted on the screen. Now, the impact assessment is based on an analysis of primary survey data and qualitative interview data collected from Jamaican firms and other key stakeholders. 2 sets of self-administered surveys were conducted using SurveyMonkey. The major survey targeted non-financial businesses operating in Jamaica. And the sample of firms was selected from a list of all registered Jamaican firms obtained from the Companies Office of Jamaica. A stratified random sample was used based on firm type, region, and sector. A total of 390 firms completed the survey, and as illustrated in the figures on the screen, a significant degree of representation is achieved across size, sector, age of business, and location of operation. Now, the impact assessment utilizing the surveys of Jamaican firms and interviews with key stakeholders has allowed the study to provide rich information on a number of areas. We looked at the manner in which Jamaican businesses responded to the COVID-19 pandemic during the containment phase up to the end of May 2020. We looked at the impact of the pandemic on firms' revenue, utilization of labor, and access to finance. And we also examined the degree to which firms expected a return to normalcy versus their risk of insolvency. So let us start with the concerns that Jamaican businesses had regarding the COVID-19 pandemic and the containment measures implemented to reduce the spread of the virus. The most prevalent concern identified by 80.2% of the respondents was inadequate liquidity. In the elite interviews, it was noted that small Jamaican businesses typically only have about 1 to 2 months of cash reserves. And these liquid reserves serve as critical buffers when businesses face significant reductions in revenue, as was likely for the 66.1% of respondents who expressed serious concern about complete loss of or decrease in their local market, as well as the 45.5% of firms who are similarly very concerned about the reduction in or loss of access to international markets. Now, liquidity concerns are exacerbated by the difficulties that Jamaican firms have with accessing external sources of finance, which was identified as a serious concern by 64.7% of the respondents. Other issues highlighted by more than half of the respondents as being very concerning include the increased cost of raw material and not having enough information to make good decisions. Now, although not shown on the screen, when we did the analysis by size, that is firm size, liquidity concerns and disruptions in cash flows identified as very concerning by over 80% of micro and small businesses, over 70% of medium-sized business, and just under 70% of large companies. Loss of access to international markets was highlighted as very concerning by a significantly larger proportion of large companies, 73.3%, relative to micro enterprises, 41%, and small firms, 48.6%. Now, despite the significant concerns expressed, considerable resilience to the pandemic was being shown by the majority of the respondent firms through to the end of May 2020. Only 1.5% of the firms responded to the pandemic by permanently ceasing operations and closing their business. The pandemic, however, as was expected, precipitated some degree of retrenchment by a number of firms, including temporary laying off workers or sending them on no-pay leave, identified by 22.1% of respondents, closing the physical offices or location of operations, 16.7% of respondents, halting production of some services, 15.1%, deferral or cessation of planned investments, 12.1%, and permanently making some staff redundant, 4.6%. Some businesses also sought to forestall or preclude laying off of staff or making them redundant by negotiating reduced salaries. Of the respondents that took this course of action, most reduced salaries by more than 25%. A number of firms also sought new clients or markets, 22.8% of the respondents, developed new products or services, 17.7%, and source substitutes for raw materials or supplies, 8.5%. Now, in this effort, a number of businesses saw the need to seek financial assistance, 15.4%, and to develop and implement business continuity plans. So as examples, some firms were noted to have taken advantage of new export opportunities, and reports were also made of promising export opportunities in non-traditional markets in the Caribbean for goods such as foods, chemicals, and sanitization material. Noteworthy, however, is that these types of opportunities were noted to have been particularly opened up in the manufacturing and agricultural sectors and were predominantly being exploited by larger firms. As you all well know, pivoting became the buzzword in many business circles as the need to adjust to the new COVID-19 reality setting. Now, this figure presents the efforts made by numerous businesses to pivot in their early responses to the pandemic. Almost a quarter of the businesses surveyed indicated attempts to reach new markets, and just over a fifth sought to change their business to meet new sources of demand. Supply-side pivoting attempts included using technology to reduce travel costs and staff costs and sourcing inputs from new suppliers. If we move on now to look at the impact of the pandemic on firms' revenue, we're going to start here by presenting firms' sources of revenue pre-COVID-19 so as to ascertain pre-existence of vulnerabilities to transmission mechanisms. And as indicated in the figure on the screen, the majority of firms surveyed, 77.3%, focused on the domestic market for the sale of the bulk of their goods and services. The USA was the next largest market from which significant revenues were earned. The other markets only accounted for significant revenue earnings for a very small number of respondents. This figure presents Jamaican firms' source of revenues by the type of customers with whom they transact. Results indicate that 45.7% of the respondents earn between 61% and 100% of their revenues from customers classified as other, which predominantly includes individual customers. Now, this is important. Why? Well, these results, combined with the results on the previous slide, indicate that most of the businesses surveyed are highly reliant on domestic sales to individuals and to a lesser extent, small firms. And this highlights an important area of vulnerability for Jamaican businesses, which stand to lose significant proportions of their revenue if there's a marked decline in local consumption by individuals and households. So maintaining the purchasing power of individuals in the domestic market is therefore critical to the sustainability of the majority of the firms surveyed. Now, the major exception to this result was exhibited in the agricultural sector, where 20.6% of respondents earned a substantial proportion of their revenue from large firms, 18.8% from medium-sized firms, and 27.3% from small firms. So Jamaican agricultural firms are shown to be highly integrated in domestic value chains. So these agricultural firms are highly vulnerable to a contraction in the tourism industry and the domestic restaurant industry. So less than expeditious restoration of these sectors will have devastating impacts on agricultural firms in Jamaica. If we proceed now to examine the impact of the pandemic during the containment phase on Jamaican firms' monthly sales, we found that it has been generally devastating, with an average decline in sales of 39%. The largest proportion of firms, 40.5%, experienced a decline in sales of between 21% and 60%. And a further 23.4% of respondents experienced a massive decline in sales of between 61% and 100%. Now, if we compare across firm size, this figure shows that significantly larger proportions of micro and small firms relative to medium-sized and large firms experienced substantial reductions in sales of between 61% and 100%. The comparison across sectors highlights the expected relative vulnerability of businesses in the hospitality, creative, and related service sectors, with approximately 30% of respondents in these sectors experiencing massive reductions in sales of 61% to 100%, and a further 46.3% reporting significant reductions of between 21% and 60%. Now, colleagues, with such a significant impact on revenues, it is not surprising that the pandemic also impacted labor utilization by Jamaican businesses. This figure shows that over half of the respondents laid off workers up to the end of May 2020. On average, firms laid off just over a quarter of their workforce. Almost a fifth of the firms indicated that between 81% and 100% of their workers were laid off, and a further 12.4% laid off between 41% and 80% of their workers. The relative vulnerability of micro and small firms is again highlighted in this figure, with over a fifth of the respondents in these categories indicating layoffs of between 81% and 100% of their workforce, compared to 11% of medium-sized firms and no large firms reporting similarly large layoff exercises. Approximately 1/5 of small and medium-sized firms reported laying off between 41% and 80% of their workers, while only 6.2% of large firms reported layoffs of a similar magnitude. Now, the highlighted vulnerability of the hospitality, creative, and related service sectors, which includes tourism, is also confirmed here, with almost 30% of the respondents, 30%, reporting layoffs of between 81% to 100% of their workforce. And none of the other sectors had such a prevalent rate of large-scale layoffs. Colleagues, the parish averages presented in this figure indicate that firms in Clarendon, Hanover, and St. Mary have on average laid off over 50% of their workers. Firms in St. Thomas, Manchester, and St. James have also laid off between 40% and 30% of their workers. Now, what is important to note that these figures should be interpreted with caution because of the low numbers of respondents in some parishes. They may give some indication of locations outside of the major tourism belts that ought to be observed closely in the coming months. Now, although more than half of the firms in our sample laid off workers, just over a third, 37.6%, had engaged in redundancy exercises up to the end of May 2020. As highlighted in this figure, 14% of the respondents made between 1% and 20% of their workers redundant, and 10.1% made between 81% and 100% of their workers redundant. Now, colleagues, the fact that 62.4% of the firms had not engaged in any redundancy exercises up to the end of May 2020 needs to be interpreted cautiously. While it may be viewed optimistically, as the majority of firms being hopeful about their future prospects, it could also mean that firms are waiting until the end of the layoff period before taking further action to separate from the workers. Now, the results on labor utilization provide evidence of the significant impact that the COVID-19 pandemic has had not only on businesses, but also on the Jamaican labor force. With so many Jamaicans surviving with a drastically cut income or without an income for a prolonged period of time, a significant reduction in domestic consumption is highly likely. And this, colleagues, brings into sharp focus the aforementioned vulnerability of the substantial proportion of businesses that are highly reliant on domestic sales to individuals. These firms stand to lose significant revenue if there's a marked decline in local consumption by individuals and households. Now, due to the heavy reliance of many Jamaican firms on domestic consumption, the potential for an adverse multiplier effect is amplified. As firms lose revenue because of the pandemic, they respond by laying off workers. As workers are laid off, consumption declines. As consumption declines, the firms that are heavily reliant on this market lose substantial revenue and are forced into further retrenchment. So measures to slow or break the cycle are critical. This could involve incentivizing firms not to lay off workers, or by supporting the continued purchasing power of people who lose an income stream. And these we'll discuss further in the last section of the presentation. Let us proceed now to examine the impact of the pandemic on firms' ability to access finance. The survey results indicate that several of the traditional sources of finance are not utilized by significant proportions of the respondents, with personal savings being heavily relied on by many micro and small businesses to finance their business. For those firms with external financing, loans from commercial banks tended to dominate, highlighting another well-documented challenge, and I think Dr. Swartz mentioned it earlier, facing MSMEs in Jamaica, as commercial banks tend to be highly risk-averse when lending to the sector. The challenge is exacerbated by the fact that non-credit sources of financing in Jamaica, such as equity financing, are not highly exploited by MSMEs. Now, the results on the screen provide another clear indication of how difficulty in accessing traditional sources of finance adversely affect micro and small firms. Medium to long-term loan, colleagues, are typically the most affordable sources of credit to finance investment in a business. Now, whereas about a third of the large companies utilize such loans to finance between 41% and 100% of their financing needs, only about 16% of microenterprises and small firms, and about 1/5 of the medium-sized enterprises use such loans to a similar extent. And this is a critical stymieing factor to the growth of the MSME sector. The last two columns of the table further show that whereas significant proportions of microenterprises and more so small firms rely on relatively costly overdraft facilities or credit cards to meet between 41% and 100% of their financing needs, no medium-sized businesses or large businesses are similarly reliant on these costly financing options. Now, despite or possibly because of the continuous discourse about the difficulties that Jamaican firms face in accessing credit, only 13% of the firms surveyed indicated a need for a loan to adjust to the crisis. However, when the businesses were pressed as to why they would not seek a loan from a private or public sector financier, only 15.6% of the respondents noted that they did not need a loan. Instead, the majority of the respondents identified factors that affect the cost of credit as barriers which precluded them from even exploring this source of financing. As indicated in the table on the screen, the cost-related barriers identified include high interest rates, cannot afford a loan now, tedious loan application process, short repayment period, and miscellaneous fees and charges. Now, only about a fifth, 19.7% of the businesses surveyed had a loan with a financial institution or public financier at the onset of the pandemic. And about a third of these firms indicated that they did not request any variations to the terms and conditions of their loan since the pandemic. And just less than half, or the 6.8%, noted that no changes were made. Variations that were identified as being made by most of the remaining firms include primarily moratoriums on loan payments, with the 3-month moratoriums being most popular. When the respondents were asked to identify the top 3 most needed variations to loan terms and conditions, reduced interest rates were most frequently identified, followed by waivers or reduction of penalties and fees, and moratoria on loan payments. Now, the survey results further indicate that more than half of the respondents who had loans acknowledged that as at the end of May 2020, their ability to repay their loans had been impacted by the pandemic, while 35.6% of the firms noted that such an impact would be low. A not insignificant 22% of the firms indicated a high impact. Note, however, that the full impact of the pandemic on ability to repay debt would not yet be evident, as numerous businesses were still benefiting at the time of writing from the loan moratoria that were offered in response to the pandemic. So as we wrap up on this section of the presentation on impact assessment, the respondents were also asked to speculate as to how long it would take for their businesses to get back to business as usual, and to estimate the risk of insolvency based in the best case scenario of the containment measures associated with COVID-19 ending at the end of May 2020. Now, with hindsight, what was then viewed as a best case scenario came quite close to capturing reality, as the government of Jamaica lifted the work from home order as at June 1, 2020, and on the same date implemented the first phase of lifting border restrictions, wherein passenger vessels carrying Jamaican citizens were accommodated. Only 2 weeks later, the borders were open to non-nationals or visitors. Now, on average, the firms sampled noted that it would take them about 4 months to return to normalcy if the containment measures associated with the pandemic ended at the end of May 2020. And as shown in the figure on the screen, over a third of the respondents, 35.2%, noted that they would have returned to normalcy within 1 to 3 months if the crisis ended at the end of May, and a fifth indicated an even quicker return to normalcy of just less than a month. Just over a quarter of the businesses indicated a time of between 4 and 6 months to return to normalcy, and only a small proportion of the sample, 2%, indicated that they would have suffered permanent impairment, and only 4.8% indicated that it would have taken more than a year to return to normalcy if the pandemic ended at end of May 2020. Now, with 92% of the firms speculating a return to normalcy of less than a year, if the pandemic had ended at the end of May 2020, it's not surprising that most also noted that they face no or low risk of insolvency in the same set of circumstances. All right. So colleagues, that was at the end of May. Please recall that the survey was administered between mid-May and towards the end of June. At that point, there was still a great deal of uncertainty as to whether there would be a second wave, whether or what types of additional measures would have been taken by the government. The respondents were asked to estimate the impact of the pandemic on their revenue, their labor utilization, their time to return to normalcy, and risk of insolvency in 2 scenarios associated with the prolonged period of the pandemic. In scenario 1, we asked the respondents to imagine that the COVID-19 pandemic lasted beyond the end of July 2020, with moderate containment measures being implemented up to an additional year. And such measures would include dietary curfews, closure of borders, international travel, and physical distance requirements. And in scenario 2, we asked the respondents to imagine that in response to spikes in the COVID-19 infection rates, the GOJ implemented significantly heightened containment measures lasting beyond the end of July 2020, possibly up to another year. And these would include measures likely to precipitate near total shutdown of all or parts of the economy. Now, although neither of these scenarios capture what has happened or may happen in the Jamaican economy, they do allow for some conjecture about what could happen if there is a second wave, and more particularly, depending on the stance taken by the government. Business estimations of the outcomes in each of these scenarios is compared to the baseline of what they projected if the measures ended as at end May 2020. Now, colleagues, this figure presents the results of the scenario analysis for the impact on revenue. The graph shows the average percentage decline in monthly sales that is projected by the sampled firms under each scenario. So while firms on average estimated a decline in monthly sales of 39.01% in the baseline scenario, significant worsening was projected for scenarios 1 and 2, with sales expected to fall by 60.37% and 66.17% respectively, if moderate or more stringent containment measures are implemented beyond July 2020. The breakdown by firm size presented in this figure shows that small firms will be particularly harshly impacted if a spike in COVID-19 infection rates precipitates stringent containment measures, with a projected decline in monthly sales of 70.76%. The projected reduction in revenues for micro-enterprises and medium-sized firms are similarly high in scenario 2 at 67.06% and 66.5% respectively. Large firms also project substantial revenue losses of 57.5%, but these are notably below those estimated by the MSMEs. Now, these figures present the breakdown by sector. The results continue to confirm the heightened relative vulnerability of the hospitality and creative sectors, with projected reductions in monthly sales of 67.93% in scenario 1 and 72.06% in scenario 2. These are substantially up from the projected decline in the baseline of 45.22%. Now, the huge impact on the sector should, however, not cause one to overlook the significant impacts on the other sectors. Look at agriculture and industry, for example. Even where the estimated baseline impact was the lowest at 28.5% reduction in revenue, a severely worsened impact was projected for scenarios 1 and 2, 55.74% and 61.1% reduction in monthly sales, respectively. Colleagues, also noteworthy is the fact that irrespective of firm size or sector, impact on revenue in scenario 2 is only marginally worse than the projected impact in scenario 1, and both are substantially worse than the impact in the baseline scenario. Why is this important? It's important because it indicates that any measures to reverse the reopening of the economy will have significant adverse impacts on Jamaican businesses. Even if the government attempts to be moderate in the reinstitution of containment measures, the impact on the economy is likely to be substantial. And this, colleagues, was confirmed in the elite interviews with representatives of private sector umbrella groups, as in some instances, even a discussion of the possibility of such a policy reversal would not be entertained. Very similar trends are exhibited when the other variables are examined. Average projected layoffs as a percentage of the total workforce increased from 27.56% in the baseline scenario to 41.65% in scenario 2 and 41.65% in scenario 1 and 47.39% in scenario 2. The average proportion of staff made redundant increased from 17.88% in the baseline to 30.57% and 37.62% in scenarios 1 and 2, respectively. Now, with such impacts on revenue and utilization of labor, it's not surprising that the time to return to normalcy in scenarios 1 and 2 are more than double that of the baseline scenario. Most indicative. In the baseline, 68.7% of firms indicated that they face no to low risk of insolvency. This is compared to only 27.8% in scenario 1 and 23.2% in scenario 2. Conversely, whereas in the baseline scenario, only 10.4% of the firms surveyed indicated that they faced a high risk of insolvency, this proportion climbed steeply to 44.9% in scenario 1 and even more steeply to 66.1% in scenario 2. Now, colleagues, most persons in any country would agree that every attempt must be made to avoid any scenario that has a high potential in resulting in almost 2/3 or even almost a half of businesses becoming insolvent. This survey of Jamaican businesses suggests that this will be the result of re-implementing stringent or even moderate containment measures that would involve prolonged closure of borders, international travel, or other measures likely to precipitate near total shutdown of all or parts of the economy. All right, so let us move on now to the penultimate section of this presentation, where we will be presenting the assessment of the GOJ's business support measures. As you know, the Jamaican government has implemented a number of measures in an effort to mitigate the impact of the pandemic. These include monetary grants for the most vulnerable small businesses and individuals. These grants have been packaged under the GOJ's COVID allocation of resources for employees, that is the CARE program. So what I've done, I've highlighted here the critical elements of the CARE program that relates specifically to businesses. And in addition to the programs listed on the screen, There were also reports that the GOJ was in discussions with commercial banks for them to provide temporary cash flow support to businesses and consumers in affected sectors. A special soft loan to assist individuals and businesses that have been hard hit was also mentioned in the press. So in the next couple of slides, we'll be assessing the degree to which such programs or initiatives were implemented and accessed by the businesses surveyed. So the businesses surveyed were asked to assess the accessibility and adequacy of critical elements of the GOJ's efforts to provide COVID-19 support to businesses. They were given the options of indicating whether the specific measures were perceived as being accessible and adequate, or accessible but inadequate, or inaccessible. They could also have indicated that their business did not qualify for the particular support measure, that the measure does not apply to their business, or that they never had heard of or seen that specific measure. And the results presented in this figure are instructive. For all the measures reviewed, the results show that the large majority of businesses either did not know about the measures, did not qualify for the program under which the measures fell, or did not operate in a sector that was being targeted by the measures. Colleagues, it is instructive that a quarter of the respondents indicated that the small business grants did not apply to them, with 80% of the sample being micro and small firms. One wonders why so many respondents did not believe that this measure applied to their business. When we did the analysis by firm size, it indicates that 34.8% of micro enterprises noted that they did not qualify for the small business grants, compared to 15.6% of small businesses. A few of the respondents indicated that their firms were ruled out because of the requirement that the beneficiaries have employees. Some respondents also noted that they had not applied for the grant because they had not filed taxes in the 2019-2020 financial year. Notwithstanding this, a few respondents indicated that they did not qualify for any of the support measures despite being tax compliant. The large proportion of businesses facing issues with awareness of, applicability of, ability to qualify for the GOJ's business support measures, even in areas where there was specific targeting, suggests that an assessment of the conceptualization and design of the GOJ's business support program may be in order. It's also very instructive that very few of the respondents indicated that any of the GOJ's business support measures were accessible and adequate. Of all the measures reviewed, small business grants had the largest proportion of respondents indicating that it was accessible and adequate, but this was only by 6.4% of the respondents. The majority of the comments submitted by the respondents related to the difficulties that they face accessing the support measures. Respondents noted that the support measures seemed to be potentially beneficial, but were not accessible. They pointed to difficulties in applying for the program through the website, the length of time taken for approval, particularly in a period of crisis when the need for support is urgent, perceptions that the system for making payments was chaotic, onerous requirements for accessing the grants, particularly those related to the provision of financial statements, and the lack of information about the forms required in the application process. Colleagues, it is noteworthy that many of the issues that affected the ability of MSMEs to access the GOJ's business support measures are very similar to the obstacles preventing access to finance from traditional financial institutions. MSMEs have very little human resource capacity and financial buffer to allow them to cope with bureaucratic delays and onerous application procedures. This is exacerbated in a time of crisis. So if the government wishes to meaningfully support this sector through the pandemic, careful consideration has to be given to the nuts and bolts issues relating to efficiency and efficacy of processes and procedures. And finally, on this screen, almost a fifth of all the respondents assessed the small business grant as being inadequate. The comment made by respondents suggests that the inadequacy of the grant precluded some businesses from even applying for it. So colleagues, let us wrap up this presentation now by highlighting some recommendations. In terms of specific policy and programmatic recommendations, we have categorized them into 4 sets of recommendations aligned with some of the major findings of the study. So first, let us recall that with most businesses being highly reliant on domestic sales to individuals, there's a significant degree of vulnerability to the highly likely marked declines in local consumption. So counter-cyclical measures are needed to slow or break the likely adverse multiplier effect. What could some of these measures entail? Well, we recommend measures to incentivize firms not to lay off workers or to make them redundant. This was the idea behind the GOJ's Best Cash program, which provided temporary cash transfers to registered businesses based on the number of workers they keep employed. Note, however, that this program is narrowly confined to businesses operating within the tourism industry and which are registered with the TPD code. The benefits are even further confined to employees who are at or under the income tax threshold of $1.5 million per annum. So the government needs to consider broadening this program to include firms in other sectors and to support employment in high income brackets. Measures are also needed to support the continued purchasing power of people who lose an income stream. The GOJ Set Cash program was designed to provide some such support through temporary cash transfers to individuals who lost jobs since March 10, 2020. Now, while such one-off support was appreciated, it was not adequate. The restarting of the discussion on unemployment insurance in Jamaica is therefore welcome. As an interim measure, the government should also conduct a quick review of the access to adequacy of and impact of the Set Cash program with a view to improving its implementation if the government intends to move forward with it. Some MSMEs also need a lifeline to tide them over to times that resemble normalcy. The GOJ's small business grants, their tourism grants, general grants, and grants to small farmers were designed to fulfill this need. But as previously discussed, the issues of awareness, applicability, accessibility, and adequacy of these grants have significantly affected their effectiveness. These programs need to be quickly assessed and redesigned to address the issues outlined. In so doing, careful consideration needs to be given to the capacity constraints faced by MSMEs. Thought also needs to be given to whether the eligibility criteria for accessing such programs could be relaxed during times of extreme crisis. And in addition to or in lieu of such grants, some businesses need temporary tax relief in order to survive. For example, businesses involved in tourism highlighted a need for moratoria on the payment of statutory deductions or other tax liabilities payable in the next 2 quarters. Moving on to the second broad area, the fundamental barriers to accessing credit in Jamaica continue to be largely cost-related, including relatively high interest rates, inability to afford a loan, tedious loan application processes, short repayment periods, and miscellaneous fees and charges. Stringent credit policies also preclude access to credit for dynamic and productive MSMEs. This, however, is unlikely to change if commercial bank credit continues to be the dominant source of financing and if equity and venture capital financing do not gain more traction in Jamaica. Crisis response measures to address the urgent need for business finance, therefore, may have to be focused on putting the public sector financiers in a position where they are better able to fill this gap, even temporarily. To this end, international development partners that provides funding support to MSMEs through agencies such as the DBJ should consider, again, even temporarily, relaxing the terms and conditions of the loan so as to facilitate enhanced accessibility and take-up. Cheaper sources of funds are also needed by the public sector financiers, so consideration could be given as a means of stimulating businesses as they seek to recover from the pandemic to a line of credit being developed and administered by the DBJ Exim Bank, which offers concessionary rates to MSMEs. The scenario analysis revealed that any measures to reverse the reopening of the economy will have significant adverse impacts on Jamaican businesses. All necessary measures, therefore, to dampen the spike in the COVID-19 infection rates in Jamaica will have to be taken while continuing with the efforts to reopen and keep open the economy. Some MSMEs will need support in making the necessary adjustments. So the GOJ and its international development partners may wish to consider the development of a grant fund to give one-time assistance with such expenditures. And finally, as businesses sought to adjust to the pandemic, many pivoted so as to reach new markets and even change their business to meet sources of demand. Suggested measures to capitalize on this momentum include approaching the international development partners to work with key MSME stakeholders to develop a comprehensive program of technical assistance that will allow MSMEs exposure to and training in a variety of skill sets critical to international competitiveness and profitability in the new COVID-19 global economy. Working with international development partners to design technical assistance programs, to strengthen business support to organizations, developing programs of capacity building technical assistance for entities providing BDS and BSS, embarking on a comprehensive drive to encourage the formalization of businesses and financial inclusion. Colleagues, I have spoken for a long time now. Let me stop and allow you the opportunity to ask questions, to make comments. Before I do so though, let me take a moment to say thank you to the IDB for commissioning the study, to the members of the business community that took the time to respond to the surveys and to speak with me, and to the members of my research team. Thanks much. Navita, over to you.
Thank you, Professor Tennant. And we now invite my colleague, Navita Anganu, Financial Markets Senior Specialist at the IDB Jamaica, to take the reins for the question and answer segment. Navita?
Thank you, Alison. Good morning, everyone. David, I will start with you while we get questions in from the invitees. I know when we were designing the work, we spent a very long time with the scenarios, whether this will end, the curtailment measures will end in August, it will end in September. Now that we know where we are, the WHO has issued their warnings. We've seen where it's spiraling out of control. We've seen lockdown measures restarting in England, Israel, the developed markets that will impact Jamaica, and we know what is happening in the US. What do you think we should look forward to, or how should the MSMEs, I don't want to use the word pivot, we've pivoted enough. I think we've seen the word being very utilized in this period. But what can we expect now? What should they expect? How can the government help? How can the development partners help?
If there's continued spiking, particularly in Jamaica, because remember the results suggested that a large proportion of the MSMEs have their markets locally, and their markets are individuals and to some extent small firms. If there's a continued spiking locally and the government is forced to implement further measures that would precipitate a shutting down of all our parts of the economy, the scenario analysis suggests that the outcome for Jamaican MSMEs would be dire. How should MSMEs respond? The MSMEs should work with the large companies, should work with schools, should work with the government to try and reduce the spread of the pandemic as much as it's possible. I know that's not the type of answer that you're looking for Navita, but that is one of the key areas that we have to think about. If there is a huge spike and there's a closing down of the economy like what we experienced at the start, many MSMEs, based on the data, will not be able to survive. There's only so much, as you had noted, there's only so much and no more pivoting that firms can do. Now, some firms are able to pivot to take advantage of new opportunities that the pandemic has created. You know, we have all heard the examples of firms that have moved into the making of masks, that have moved into sanitization products, sanitization services, pickup restaurants, etc. But that's some. Other firms are going to find it difficult to survive.
Thank you, David. I'm going to go now to Therese to ask, what specifically has the IDB done to help MSMEs in Jamaica? I would invite our participants, however, to please send in questions. I'll open it shortly after Therese and Moises had a chance to answer. To you guys, if you want to ask the questions orally as well. But please, you can post your question in. Therese?
Thanks, Navita. I mean, I thought Moises did a really excellent job of talking about all the ways we have been working with SMEs in Jamaica. We have a long-standing relationship with the Development Bank of Jamaica, and they've been our main partner through which we can channel support to SMEs. We also have the Credit Enhancement Facility, again, working through DBJ and financial institutions. We've got BID Lab, which is IDB Lab, which is everybody knows is our sort of innovation lab. And we've been supporting small entrepreneurs through that window for years now. But, you know, I think David threw up some really important issues in this study about further support. The issues around technical capacity and building out BSOs, these are business support organizations. I think it's a really important one, and maybe we can do more there. And here I'm thinking of women-owned businesses and working through those kinds of institutions where they exist, clusters of businesses to provide this kind of support. Obviously, COVID-19 and this economic, I call it almost calamity, is forcing us to be even more creative about how we deliver that support. I think the detailed information we got in this kind of research is so insightful on so many levels, because we can pin it down by, size of firm and where they're having difficulties. I think it gives us a roadmap for future work. And we will continue doing what we're doing, but I think we need to also bolster the work we're doing under the Big E loan that everybody knows. Big E stands for boosting innovation, entrepreneurship, and something else. Entrepreneurship and something else. In Jamaica, that particular project is focused on innovation, focused on building the capacity of entrepreneurs to take advantage of changes in technology and how they can upskill their firms, but also use technology to do things differently. David mentioned that some businesses found themselves pivoting towards, PPE equipment. We've got let's take an example of like Blue Dot, which is basically a knowledge firm that found itself producing face shields with 3D printers. So there is a lot that firms can do if they have the mindset to do it. I know access to finance is one of these stubborn problems that we've been facing throughout this region, not just in Jamaica. Trying to get the financial institutions to take a credit guarantee from the DBJ or from the IDB to allow these small firms to flourish is something we cannot stop doing. And I think this, we continue to pound the doors of the financial institutions. I think financial institutions are going to finally get it, because given the length and depth of this particular crisis, we're going to have to figure out ways to better support this particular sector. Thank you, Navita.
Thanks, Therese. I have a very interesting question here, David, I imagine for somebody to answer. Are there plans to modify the CEF offered through the DBJ? Well, I can answer that. But more importantly, how much money do you think would be the support needed to buffer the significant fallouts that we have seen in the MSMEs as a result of the pandemic? I'm not sure who will take that. David?
Sorry, I was muted. How much money? I can't answer that.
How much money do you think?
I can't give a dollar figure. The results did not allow us to be able to quantify it like that. So I really can't give a dollar figure like that. I'm sorry.
But clearly we need more support than what has already been done by the government. Another question is, can you say which sectors of the economy the government will be prioritizing in the short term? Well, we don't have any government person on the panel. And where do you think the MSME sector should be ranked for the limited resources available?
I could take the second part of the question, Bradley, yes. and thanks for the question. The MSME sector needs to be ranked quite high. If you think about employment in the country, this is one of the areas in which the economy has done quite well pre-COVID, reducing the unemployment rate. A lot of that employment comes through the MSME sector. So if the MSME sector diminishes and struggles, then employment is going to be adversely affected. If employment is adversely affected, then local consumption is going to fall. If local consumption falls, then the sector is going to be worse affected, because remember, their market is primarily individuals in the domestic market. And so the adverse multiplier effect, which I spoke about, is going to be significantly worse. A key way of helping to break that cycle, or at least slow it, is by providing support to the MSME sector.
Thank you. And the question to Therese on the CEF, how has the CEF been modified to help?
Rita, I thought you said you'd answer that one. Go take a stab at that.
Okay, so So we've been working closely with the DBJ, and we've made several modifications to the CEF to make it more applicable in this time of COVID crisis. One of the findings that David had was a lot of the SMEs weren't doing the registration or didn't want to do the TCC. We've made that redundant for this period, only for the pandemic. We've also increased the claims cap from 10%. So the CEF had actually moved from an investment portfolio to a portfolio method, an individual scheme to a portfolio method. So where they were previously doing an individual scheme of the banks come into the DBJ with individual loans and said, okay, we would like 10 individual loans to be guaranteed. We're now going by banks. So the banks come and say, listen, we would like a portfolio of $2 million to be guaranteed. So we have moved from the cap scheme of 10% to 20% because of COVID, because we recognize that companies may go belly up, let's put it bluntly. And because of that, we've increased it. And the other one we have done is that because we have seen a lot of new companies coming on stream to take advantage of the whole pandemic in terms of delivery, for instance, you see companies suddenly in the delivery business that were not there before, and taking advantage of this, we have allowed startups to also be part of it, which wasn't part of it before. So those are three main ways that we have done, that we've made changes to the CEF to enable that to be more relevant to companies, MSMEs in particular, in these times. Is there any insight, this is another question, is there any insight on which sectors the country should be focused on to ensure economic fallout isn't too grave during COVID? David, you want to take that?
No, answer is similar to that for Bradley. When we did the breakdown by sector, we would have seen, as would have expected, that the hospitality, creative, and related services sector is the most impacted in terms of loss of revenue, in terms of layoffs, in terms of redundancies. Note though that I did not say tourism only. Tourism is a part of that sector, but there are a lot of other different types of firms that are within the creative and hospitality sectors that need to be considered. We also need to focus not just on a sectoral breakdown, I would suggest, but we need to do some focus on a size breakdown. The research strongly shows that micro and small firms are particularly impacted irrespective of sector. And so micro and small firms need to get significant focus. The results on the breakdown by parish were quite interesting. You could recall when I showed the screen with the map with a number of parishes indicating significant proportions of firms having high levels of layoffs. That is an area where further attention should be given to. I was cautious in presenting those results because there were one or two parishes where the numbers of respondents weren't high enough for the results to be reliable. But it is indicative and suggests that a parish breakdown and examination of the other results spatially could also be useful as well.
Thanks, David. I have a question from GMEA, from Amigo. Thanks to the IDB and Dr. Tennant to undertake this study, the GOG has pursued a balanced approach between the health and economy. We are now in a phase of community transmission and the approach will remain the same, with new sets of protocols being introduced. However, our economy has shown an 18% decline in the economy while manufacturing has contracted and has at least followed. However, most of the interventions have been geared towards tourism sector. Should this change or be broadened to promote greater diversification of the economy?
Thanks, Amiga. The focus on tourism has been because tourism has been shown to be hardest hit. As the pandemic continues, as the effect continues, then the spin-off on other industries or other sectors is also going to broaden as well. Again, I am suggesting that the focus should be on the most vulnerable firms, and the results suggest that outside of a sectoral approach, the most vulnerable firms are the micro and small firms. I think the focus should be there because that is where you get a greater bang for your buck in terms of the ability to keep persons earning some kind of income. I don't know if that answers your question, Amigo. But let me just take a moment to say thank you to the JMA because they participated quite well in the study, as well as to the PSOJ and the other business support organizations. Thank you for your support.
Thanks, David. The next question, are you able to compare the Jamaica GOJ support adjustment program with that of Barbados? I know we did some review, but I don't know how in-depth it was, David.
You answered the questions perfectly, Nabita. We did a bit of a review. Pat, thanks for the question. The comparison was not detailed enough for me to be able to give you any sufficient answer right now. We looked at Jamaica, the Jamaican government's response with a number of other countries, internationally, but also regionally, but at a very bird's eye level, Pat. So we were able to say that, well, our expenditure per capita per GDP wasn't that much different from anywhere else. We're able to say that the international best practices that have been established for support, we adhere to international best practices. However, where the government support measures fell down is what I identified in the presentation, the nuts and bolts issues, the issues relating. So yes, on paper it looks good. The best cash, set cash, etc. It all looks good on paper. But when you talk to the businesses are saying that, well, yeah, it looks good, but we didn't get much of that. And we have to look at issues of accessibility moving forward. And it is something that needs to be said repeatedly because it's the same issue that MSMEs face with regards to accessing financing. And this is not something that is new. We know it. And so we need to be able to structure our program so businesses can actually have access rather than having support programs where businesses look at it, want it, but are frustrated because they can't get it.
David, can you elaborate more on the link between agriculture and tourism? Indeed, there's a view that there's not a strong link, but the studies seem to be suggesting otherwise.
Samuel, I can't go into depth as to what the link is in terms of figures and numbers. The study wasn't designed to be able to pick up that bit of information. What we did see from the results, where we looked at where the firm's major sources of revenue came from, the agricultural sector was one of the sectors that had the highest level of domestic value chain linkage, or highest level of participation in the domestic value chain. And the presumption that we made, so I'm careful to use that word because the results didn't allow us to see this, but the presumption that we made was that a big part of that would be through tourism, a big part of that would be through the domestic restaurant industry. But I can't speak definitively to the numbers here, Samuel. The study wasn't designed for that purpose.
I have a question here from Bradley again. With regards to your proposal of a partnership between the MSMEs and large companies to control the COVID spread and hence more restrictions being put out in the economy, is there any models from other countries that you could recommend?
Well, the proposal wasn't for more restrictions being put on the economy. The proposal was for greater support being given to MSMEs as the economy reopens, as the economy stays open, to be able to finance the preventative measures that are needed. A lot of the times we say that, well, purchase PPEs, ensure that there's physical distancing. A lot of large firms get about doing that quickly and effectively. When one considers small firms, the ability to make that adjustment isn't always as easy because these things cost money. And so the proposal, Bradley, was that there could be some consideration to a one-time grant to firms to make these kinds of adjustments.
Next question, you raised the matter of redundancy, and we've heard advocacy for a change to the law to facilitate a longer furlough period. What are your thoughts, given that we are now looking at a surge for the next 2 to 3 months that will impact sales and employment?
Very good question, Amiga.
Yes.
My knee-jerk reaction would be to say that, well, this would seem to be quite logical, but it will be just that a knee-jerk reaction. I do not know. I haven't thought it through. I do not know what the further implications of this would be. So when we start to think about furloughs and prolonging the period, I think we should consider it, but we'd have to think through the implications very carefully.
Ladies and gentlemen, we would like to thank you so much for your attention. This has been a very enlightening study. Clearly, the business sector has been really significantly impacted. And there seems to be a lot of work that needs to be done, and all hands need to be on deck. We want to take this opportunity to thank you for sharing with us today, for being with us today. Special thanks to Professor David Tennant for all the work that he has done, our other counterparts at the University of the West Indies for partnering with us in this way. We also thank Therese Turner-Jones and Dr. Moses Schwartz, who presented today. Many thanks to the business community who participated so actively to be able to allow us to share this information with you today, and also to other members of the academia and the production team. Please remember that COVID is still with us. We encourage you to uphold the health protocols. Remember to sanitize, wear masks, and keep your distance, and work smart, work safely. Do have a good day. Thank you very much.